Hello again and welcome to Pearl Magazine. Government data shows commercial property prices fell almost 40% since their peak in 2018. Many investors have decided to sell their street front shops as rental income and valuations have plummeted. Reporter Alice Khan visited a few street shops which were sold at a huge loss.
We sold 5 consecutive shops all at losses, or an average of 28%, and we see more coming too.
If there's any defaults, there are the risk of calling the loan from the bank.
Retail shop prices are still going downward. I don't know whether it has reached the bottom.
Capital values of all Hong Kong's commercial properties continued to fall in the first quarter of this year due to weak market demand. Investment volume contracted by 46.8% quarter to quarter, while transaction value was $5.8 billion during this period, the second lowest quarterly total since the first quarter of 2009. Hannah Zhang, the executive director of CBRE, said financially stressed sales in the retail property sector accounted for 50% of these transactions.
This is unfortunately happening due to high interest rate. Whoever bought a purchase after 2018, when market was peak, actually our price level is around 38% down. So people want to have a less loss, and they are rushed to selling, given the economic growth is a little bit uncertain. But if you look at real forced sales closure, like going through the receivership, the case for the street shops are very little. So those are more happening for the larger assets like retail podium or on block type of Ginza type retail.
Edwin Lee is a street shop investor. In 2009, he set up a fund investing in street shops. He took us to his shop on this street in Jordan. In 2022, he bought this 1,000 square foot shop for $27.5 million. He rented it out to a foot reflexology service owner.
This is Wuzhong Street, famous for massage, foot reflexology business. In the past, when the border was closed during COVID, everybody stayed in Hong Kong, and the busiest is usually during the weekend. Nowadays, because of the opening up of the border, people going northbound to mainland China, so business has been negatively affected on this street. So it does affect the rental income as well.
Edwin sold the shop about 2 months ago.
Is this the first shop you're selling at loss?
Yeah, this shop, I purchased shop property since 2009, and through me, purchase, sold, about 260 shops in Hong Kong, value about 5 billion Hong Kong dollars. I purchased back in the year 2022 for 27.5 million Hong Kong dollars. I sold it 3 years later for 18.68 million Hong Kong dollars, so it's a loss of 32%. Yes, it's my first drop of blood.
Some landlords lowered their rents to retain their tenants, but Edwin preferred to sell the shop at a loss.
If we continue to hold on to this shop, let's say, unfortunately, the tenant is not able to continue the business, and then we have to decrease the rent from 75,000, let's say, to 50,000. Once we decrease the rent, the bank will know immediately, and then they may lower the valuation of the shop. For a shop value of 27 million, let's say we borrow 40%. All of a sudden, the shop value decreased to 18 million. The bank will right away ask us to make the difference.
Edwin says the interest cost is so high that he has to sell them.
Many of the investors in Hong Kong, including myself, for a commercial loan to borrow from bank to buy this shop is about 1 month HIBOR plus 1.5 to 2%. Their 1 month HIBOR was as high as 5-6%. So if you use 6% plus an additional spread of 2%, that's 8%. But we're getting a rental yield of 4.8%. That's why it's a negative carry. And that also explains why many of the landlords are selling the shops.
That's why Edwin continued to offload his inventory. He showed us another shop in the Western District. He bought this small restaurant 3 years ago for $24.5 million. Last month, he sold it at $15.6 million, a 35% loss. He says he's facing pressure from banks.
I cannot necessarily say that they are calling loans because they are not calling the whole amount. They come to you and they ask for 2 things. First is, if you're not selling, they want you to make more fixed deposit in the bank. Or second, they will ask you to lower your exposure in the commercial property. If you do not put more cash in the bank, or if you don't sell any properties at all, one day they may come to you and say, we decide to call your loans, and then you have to repay the whole amount. Then you're in trouble. If you're not able to repay, then it becomes bank foreclosure.
Back in April 2023, Edwin showed us around his shops in Tsim Sha Tsui when the border was reopened. He was very optimistic about street shop investments.
The border opened up in February 2023. And so for a few months after the border opened up, the retail market in Hong Kong was pretty okay because everybody was expecting tourists to come back.
We went back to the shop.
So now we're standing in Tsim Sha Tsui. This is called Humphrey Road. Humphrey Road, Hai Phong Road, as you can see, it's a lot of tourists. The footfall is very high. So the shop that we're looking at today is this one. We bought it in the year 2023, 2 years ago, for 20 million, and we just sold it for 17.3 million.
He sold it at a loss of 14%.
We expected to lease out for about 70,000, 80,000 Hong Kong dollars. So if you divide it by 20 million, the purchase price, that would be about 4 to 5% yield. But then, unfortunately, the spending power decreased more than expected. Originally, we wanted to lease out to more retail, selling maybe luxury watches, a jewelry store, maybe a currency exchange store. But then now it turned out to be a bubble tea shop. So the rent is not as high as expected. That's the reason why we have to sell at a loss too.
Edwin says property investors and developers wrongly predicted the market.
Everybody expected the price to go up after opening up of the border. Nobody expected a lot of people go northbound into mainland China for spending. A lot of people did not expect the interest rate to hold up so high for so long. And then a lot of people did not expect the trade war to be coming so quickly and so severely.
Edwin has already sold 5 shops at an average loss of 28%. He said he would sell more at a loss to repay his bank loan.
Currently, we have another 40 shops putting on sale in the market, total of 1.2 billion Hong Kong dollars. We expect to sell another 200 to 300 million Hong Kong dollars in total for this year. We expect the next 10 to 15 shops that we're selling will most likely be at a loss too, because the market is down 40%.
As more investors like Edwin are selling their street shops across Hong Kong, there are more vacant shops in the city. High street shop vacancy rates edged up slightly to 10.6%, while shop vacancy rates in the residential area stood at 15%. But Hannah Zhang, the executive director of CBRE, says she's seen some buyers starting to hunt for bargains despite the challenging market.
Main driver, like demand from the market, is really the local buyers, because retail shops lump sum still smaller than those own block buildings, and they can be a cash buyer because now financing from the bank is quite challenging. Even you buy the new asset, local investors, they like to look at the shops if they are offering big discount. And also some tenants, they are user of the shop, and now the price level is at the bottom, so they want to turn into the ownership.
Edwin sold 1 shop to a local investor and 4 to mainland Chinese buyers. Today he's taking this group of mainlanders to check out shops in Central and Sheungwan.
Because they have been in Hong Kong through different talent schemes and they want to stay in Hong Kong. They either want to find a job or start a business. But of course, in today's economic environment, finding a job at a managerial level is always difficult. Then another option for them is to start a business.
This mainlander, Laura He, plans to purchase a street shop for a tutoring business. But after an hour touring Central and Sheungwan, Laura said she wouldn't make a decision yet.
It is not easy to make money now, and the market is not that vibrant. So everyone is more cautious. Will the economy fully recover in the future? It'll take time to see if it does.
Hannah expects the capital values of high street shops will go down by 1 to 5% this year.
The key will be whether the interest rate can come down further. There are expectations of that the inflation may stabilize during this year and the Fed try to lower the rate cut. Then that will also help the investors in the market. I think current situation is really not favorable for investors due to high interest rate, uncertain economic growth, and also slow spending of the customers, and that leaded to soften retail sales.
She says the U.S.-China trade war is also affecting sentiment.
The impact on the tariff or geopolitical issue may not be directly hitting Hong Kong market, but the point is all this creating uncertainties. So investors worrying about it, don't know what will happen next few quarters, so they want to sitting on the cash